Lee Schneider is the general counsel of Ava Labs. The company developed the initial Avalanche protocol. Avalanche blockchain is a fast, low-cost, and scalable smart contracts platform for Web3. Ava Labs empowers developers to build custom blockchains and digital assets, aiming to digitize and democratize finance and other industries by providing high-performance infrastructure for decentralized applications. And Lee is with me now for our Markets on Chain special that we're doing for the Global Blockchain Business Council. So welcome, Lee. And
thank you.
now, interesting, you just met with the SEC Crypto Task Force to advance your proposal for how to structure regulation in this area. So what was the takeaway, would you say, there?
I thought it was a really good meeting. Commissioner Peirce came to the meeting with the rest of the people from the task force, and we were joined by people from the Blockchain Association and the Digital Chamber. So thankfully, the proposal is not just my proposal, but it's something that a bunch of us are starting to talk about now. And this is really a way for the SEC to start to regulate crypto and the markets in crypto, particularly through regulating the intermediaries that it already regulates. So brokers, dealers, ATSs, exchanges. And so that was really what we were talking with them about, and we're trying to advance some ideas. So as they start their rulemaking, which everybody anticipates next year, hopefully they'll incorporate our ideas there as well.
Okay, and I did read a little bit of the paper.
Yes.
And you write that Ava Labs believes it is best for the securities laws to remain centered on securities and for commodities laws to remain centered on commodities.
Yes.
So does that mean a separate category for digital assets?
That is what we are proposing.
Right.
We are proposing a category called protocol tokens, which quite simply is defined as the tokens that are integral to the functioning of a protocol. And protocol could be a layer one like Avalanche or Ethereum or Solana, but it could also be a DeFi protocol. It could be a layer two. So for us, having the idea that there are these things, these protocol tokens, that are sort of new, that sit a little bit with some characteristics that look like securities, a little bit with characteristics that look like commodities. We do think we need a third category, and that's our proposal.
Yeah, that's really interesting because I feel like ever since I've been introduced to this space, that has been the debate.
Yes.
Securities, commodity, but
Yes.
it's totally third category could make sense.
We like to think outside the box every now and then. You know, I've spent more than 10 years working in this space. I wrote some of the original memoranda that were published on the definition of investment contract and whether or not tokens meet the definition, et cetera, et cetera. And the more I've thought about it, the more it's clear to me that we're not going to solve this by just continuing to argue about whether tokens are securities or commodities, even though that's the way U.S. law breaks out. When Congress has the opportunity, which they do now, to do something new and revolutionary, that's what we're trying to encourage everybody. Let's come up with this new category. There's lots of ways to regulate it that are similar to the way securities and commodities are already regulated, right? Those are all assets that trade electronically, that are custodied electronically. So we can take advantage of a lot of the existing regulation, but apply it to this new category of protocol tokens.
Okay. Then I recently heard an interview with the SEC chair, Paul Atkins, and he was talking about the benefits of tokenization. And I always like to kind of explain what these terms mean for people. How would you describe tokenization and the benefits of it to average American?
Sure. So tokenization is simply creating a digital representation of something. It can be a bundle of rights. It can be an asset. It can be permission to do something. So we've seen all different kinds of assets get tokenized. Protocol tokens are one example, but people are tokenizing stocks and bonds. People are tokenizing real estate and titles to automobiles. People are tokenizing tickets to concerts and sporting events. The list goes on and on. I haven't even touched, things like meme coins, which are sort of tokenization of a joke, right?
Yep.
That's really what a meme coin is. And so because you can digitally represent anything on a blockchain, it really opens up the ability to have representations of assets and understand who owns the asset, know that you've established ownership and transfer of the assets. And so for us, tokenization is all about creating representations. It's the same thing we used to do with paper, right? There used to be paper stock certificates back when this floor was a mess of paper.
Yeah.
And those stock certificates were part of that. But now we've moved to computers, and tokenization on blockchains is sort of the next iteration of representing assets on computers.
And I feel like it democratizes finance as well. It will give
100%.
people, say, a commercial office building, somebody could buy through tokenization a piece of that.
Sure.
And benefit from the increase in value, whereas they couldn't possibly buy the whole building, So
Yes.
I think that's kind of exciting.
I very much agree with that. A lot of people talk about that idea with regard to fine art. Fine art is something that's not accessible to most people. And so having fine art and then tokenizing it and allowing many, many people to own part of the art or to participate in the ownership of the art is, I think, a really cool idea. Maybe some museums will get into the game there. See what happens.
Yeah, that'll be exciting to see if that happens.
Yeah.
Now, how does the U.S. compare with other countries when it comes to digital asset regulation?
Well, so some people like to think that the U.S. is way far behind. Some people like to think that the U.S. is doing it right. There's a lot of arguments there. I mean, my view is that the U.S. is sort of somewhere in the middle of the pack. Japan was, I think, the first major country to have comprehensive crypto regulation, and a bunch of other jurisdictions followed them. Europe in particular has had the market in crypto assets regulation in effect for stablecoins for about a year and a half now, and for the rest of crypto assets since the beginning of this year. Singapore has regulation, a bunch of other countries, but there are also countries that are nowhere near there. So the UK is still figuring out what they're doing. South Korea is still figuring out what they're doing. A lot of the countries in South America are still figuring it out. So the world is a little bit of a mixed place in terms of how far along people are at a comprehensive crypto asset regulation. And I think that the U.S. is firmly in the middle of the pack. A lot of people look to us to see what our regulation looks like, but it was great to see Japan and Europe and a number of other jurisdictions say, you know what, we're not going to wait for the U.S. because this is something that needs regulation now. And they really jumped on it and took it under their wing.
But I feel like it's really accelerated this year. The interest from the White House and in regulation, and there's a crypto AI czar, and
Yep.
They're really taking it seriously. So that might propel this legislation to come about quickly.
I think that's right. It's been a change from what was a pretty hostile environment the previous 8 years to a much more accepting environment with a recognition that it's time to get some regulation in place. I've been advocating for regulation for quite some time now, in part because it provides an imprimatur to the marketplace, but also because one of the ways that we encourage the good actors is through regulation. We provide a space for them to do their business in a way that they understand the rules of the road, and that makes business much easier to do.
For sure. And you avoid all the Wild West scenarios. So if you have some sensible regulation.
I mean, look, the Wild West was probably great if you had a certain temperament. But business people didn't like the Wild West because how do you operate a business when people are constantly busting up your saloon or breaking up your barbershop or whatever. And so now, having some cops on the beat, having some regulation that makes it clear what the do's and don'ts are, I think is much better for everybody.
Now let's talk about RMF. So a central goal is to make blockchain-related operational risks identifiable, accessible, manageable for regulated financial institutions. How can the RMF be practically adopted by institutions? How can Ava Labs support the RMF aligned risk assessments across the subnets, the cross-chain bridges, the multi-chain deployments?
Yeah, this is, I think, a great initiative by the Global Blockchain Business Council to develop this risk management framework, or RMF, for financial institutions. Regulated financial institutions have obligations to assess the risks of the technologies that they're using and make sure that they have reasonable policies and procedures in place to manage those risks. Well, with decentralized permissionless blockchains, there's some risks there that are the same as risks that people are already dealing with. There are some risks that have characteristics that are the same, but also have some differences. And then there are some risks that are pretty new and novel because of the decentralized permissionless nature. And so what the RMF group has been trying to do, and that's been under the leadership of GBBC and the folks at Oliver Wyman, we're a participant, Cardano's a participant, DT's, there's a whole bunch of participants, both in sort of the quote unquote crypto native world and in the quote unquote traditional financial services world. And the whole idea is to bring to bear a lot of learning and understanding about these networks and protocols so that we can develop some really good outlines of how people can approach risk management for blockchains.
Okay. And then also, the RMF intended to help regulators and market participants converge on shared definitions, also expectations for public blockchain infrastructure risks. So how can RMF then guide future supervisory standards and also, for these operational, transactional risks, technological risks? And how can Avalanche's engagement with the industry bodies then also help promote RMF-aligned practices?
Yeah, so we actually spend a lot of time interacting with trade associations, regulators, and policymakers because we think it's very important to get a good understanding here. You mentioned definitions and coming up with common definitions.
Yeah.
This is something that we've been banging on about for years now because people start talking as if everybody knows what they're talking about, but often there is nuance that needs to be understood. And so different blockchain protocols function differently. Even proof of stake works differently in different blockchain protocols. So making sure that the technology is well understood is what we think our most important role is. A lot of the more traditional financial services companies that are already regulated, they bring their knowledge of risk management from the regulated world to the table. And so it's a good mix of people to sort of figure out how to approach risk management here. And that's the goal, is to have this continuing dialogue for different elements of the industry, as well as different elements of policymakers and regulators to hopefully come together with some standards that everybody can agree upon.
And of course, markets operate best when there's clarity and consistency, and that helps with resilience and consumer protections as well. So how can the RMF inform institutions' resilience planning, such as incident response, failover design, disaster recovery, when they rely on Avalanche as part of their infrastructure stack?
Yeah, so I'm going to bring things back to tokenization, which we talked about a little bit. Tokenization is digitally representing things, assets. As more stocks and bonds, more futures and derivatives become tokenized assets and are traded and exist on blockchains, there's going to be a need for everybody to understand how to manage risks associated with that. As I said before, some of those risks are already well understood, and there's good frameworks for how to manage those risks. Think about the internet. People have been using the internet for years. Financial services has been using the internet for years. The internet is an open, permissionless network, right? There's nobody who's in charge of the internet. And so companies have learned how to adapt to that kind of environment. So a lot of that learning is already there. The key now is to identify those areas where there's new, uncharted territory and come up with risk management associated with that.
Okay. And then the RMF identifies governance risks as a core area that institutions must consider in their risk management programs. Now, how can financial institutions embed the RMF into their governance risk assessments for blockchain networks? What does Avalanche specific governance transparency or disclosures would best support RMF aligned institutional risk management?
So governance is a tricky topic. There's been a bunch of academic research on governance of protocols, and the research is somewhat mixed. Part of that is the way voting happens and the way voting is organized in those protocols. So there are definitely issues to be untangled there. On Avalanche, one of the nice things is people can start their own custom layer one blockchains. And so they can impose whatever governance protocols they want when they start their own blockchain. And that blockchain can be interoperable with all of the other Avalanche blockchains. So there's a lot of flexibility that you can build in there. We think this model of participatory governance, particularly where the financial institutions that have a vested interest in outcomes are part of the governance, makes a lot of sense for the trading of financial instruments. But look, we're also big fans of the open permissionless blockchain world. And so there is some tension there between the different types of goals and the different types of governance that are at play. I don't know that anybody's figured out sort of the silver bullet answer there, but that's one of the things that we're working on in the RMF project.
And just finally, I want to get your thoughts, being kind of on the front lines of this industry. I mean, where do you see blockchain, digital assets, crypto, I mean, kind of this whole ecosystem going? How will it be a part of our lives in the next generation?
Yeah, so I'm actually one of those believers in the fact that most people won't know blockchains are involved in their day-to-day life. I mean, unless they're trading crypto, right? Unless they're trading protocol tokens. So I think that what's going to happen is that the technology layer, as is almost universally the case, is going to slowly sink below the level of consciousness for most people. Just like I don't know how most of the apps on my phone work, just like I don't even know how my phone works, really, right? Like all of that stuff is abstracted away. And what I care about is functionality and being able to do the things that I need to do with the apps, with the devices. So it's a software doing stuff that I needed to do. It's hardware doing stuff I needed to do without me having to understand all of it. So I'm going to continue to drive my car and not know how it works. And I think most people, that's going to be their blockchain experience. They're not going to even know that blockchain's involved in things. But for those who are involved in blockchain, it's going to be the critical database layer of the internet for the foreseeable future. And that database layer is going to allow for all kinds of ownership, all kinds of transactions, and all kinds of commercial, financial, recreational, communicational, all kinds of activities, many of which we haven't even figured out yet. And I look forward to all of the creativity from people that will figure that stuff out.
It's an exciting time, and it's kind of fun to watch it develop
For sure.
10, 20 years or so.
I plan to be around for a lot of that. And it's one of the things that keeps me interested and excited. I was once talking with a reporter a number of years ago, and they said to me, boy, it sounds like you really like your job. And I thought about it for a second, and I said, you know what? Right now in my career is the best time since I worked at an ice cream parlor in college, where I could eat as much ice cream as I wanted. Got to watch out for that nowadays, but yeah, it's pretty fun.
Lee, thank you so much for being a part of our Marcus on Chain series from the Global Blockchain Business Council.
It's my pleasure. Thanks for inviting me.